Hey, what's up, everybody? So the market is going up today. The last couple of days, it's been finally having a little bounce, but uh, don't expect too much. Right? Tomorrow on Wednesday, the Federal Chairman Jerome Powell is going to be talking about what the Fed is going to do to basically curb inflation. The market is expecting that the federal government is probably going to raise interest rates by about 50 basis points. And so, but we'll see. A lot of how the market will respond will depend on how Jerome Powell just lays out the plan for what they're going to do with inflation. Okay, so today I have a lot of stocks I'm talking about just for you to take a look at yourself. This is by no means any kind of financial advice. It's simply stocks that I'm looking at myself, and I'm going to tell you how I'm trading them. In the previous video I just made, I showed you some live trading on my Interactive Brokers account, and so that way you know that this is not just me speculating, but I also have some skin in the game as well. Okay, so let's just get right into it, guys. Let's start with a couple different industries. One being the semiconductor industry. One of my favorite companies right now is AOSL. Okay, so Alpha and Omega Semiconductor. If you look at the charts, they're trading right now. First of all, their price earnings ratio is 2.87, so that's super low. They had a really massive rally, and then they had a big drop, so they went up all the way to $65. Now they're all the way down to $45, and that's kind of the point I'm getting in on. And right now, if you do trade options, you can get some pretty sick premiums on Alpha and Omega. Again, this is a company that has solid fundamentals. Take a look at yourself. Go to Nasdaq.com. Go to Finviz.com. Check out the RSI. Check out all the technicals that you want to take a look at. I'm gonna go through different technicals, just very briefly on different stocks. May not do it on every stock, or else this video is gonna be very long. But yeah, take a look at this. This price earnings is 2.87, 4 PE 9.17. They have a market cap of $1.25 billion. This is a solid company to own, in my opinion. And let's take a look at what you can do with trading options. So I'm selling put options. I think I sold it out to a couple months. Actually, I sold it out to December 16th, and I think I did it at a $45 mark. So I'm collecting almost $1,000 on 3,500 worth of capital. So that's almost that's like 30% gains, like almost 30% gains in a year, in less than a year, a couple months. So that in my opinion is great. And the way it works, guys, is if the stock goes down to $45, you may get assigned, but you probably won't, because the option buyer, the person who bought the insurance, is not going to just essentially sell his stocks at a loss, right? Because he paid a fat premium for it. He paid $960 for it. So the point where you start to really experience loss is if the stock goes down 22.71%. Okay, so if you count for a premium and the discount of the stock that you're getting into, the stock would have to lose about 22% for you to start realizing a loss, right? And let's say the stock goes up. I talked a lot. I know I talked a lot about this in various videos, but just a recap: the stock goes up, you can essentially buy back the contract and just essentially profit from that as well. So you don't have to wait till December 16th. A lot of contracts I get out once I take a lot of contracts I take out once I profit about 40-50%, and I just cut it right there, right? I don't want to take my profits and just not have to wait much longer. Okay, so that's AOSL. Of course, the other one that's really big out there right now is AMD stock. So I'm sure many of you guys have heard of AMD, Advanced Micro Devices. If you take a look at the 1-year chart, guys, it's going down a lot, right? It peaked in November at $161. Now it's trading at $91, and this is a solid company, guys. This is, I know Nvidia is also down, but AMD, in my opinion, is very tradable at this point. If you want to just buy shares, that's fine. And full disclosure, I haven't actually gotten into AMD myself because I've been looking at the stock, and I just seeing it drop quite a bit. But if I were to get into it, and which is very, very possible, I would also consider selling put options. And so I would sell it right now. If I take a look, right, if I sell it at 95, I can collect about $1,360. That's pretty good. That's, about what, 10%, maybe 10% gain in a couple months. You can sell it out a little further to November 18th and collect a little more. It's just all up to you guys. It's really all up to you. If you really want to get assigned the stock or have the possibility of getting assigned and own 100 shares, then what you can do is you can simply turn around and sell covered calls. So let's say I want to kind of up my risk a little bit, and I want to get in, like I want to buy 100 shares right now. But instead of buying it, I can simply sell a put option out in like a month or so. In even a month right now, guys, it's insane. You can collect about $1,000 if you sell it at the $97 mark. So let's say it falls down a little bit and the option buyer decides to exercise, you can collect $1,000. And so you would essentially be getting AMD at $86 or $87. And that is an all-time low, right? That's $87 is like when it was trading back in July of last year. So you would really be getting a sick deal on that. And then let's say you do get assigned 100 shares of AMD, you can turn around and sell covered calls. So covered call just basically means you have to have 100 shares, and if the stock goes up, you might be forced to sell it, right? But then you would also collect a premium, and that's also great because you're not only getting the stock sold at a higher price, but you also get paid a premium. Okay, so if you sold AMD out to like 104, so the stock of AMD goes from 97 to 104, you get the difference of that upside. So that's like what, $7, and you get paid $200 for that. So you're making quite a bit of money on that trade. Okay, so let's not get stuck too much into the semiconductor industry. Let's talk about shipping. Okay, so shipping is gonna be really, really interesting. I know that right now there's a lot of a lot of the shipping industry is going to benefit from Russia basically halting gas exports, and so I'm looking at companies like GNK, so stock ticker GNK. Okay, Genko. Okay, Genko Shipping. Right now, guys, again, very cheap company. Price earnings ratio of 5.34. That is crazy, crazy great. GNK and Zim are my picks for the shipping marine industry. And if you take a look at options with GNK, again, take a look yourself. You can do a lot of different ways there's a lot of different ways to research stocks. You can use stock screeners. You can just go onto NASDAQ.com. Right now, I can go to NASDAQ.com, and I can type in GNK. Okay, so GNK, and you can see their financials. As you can see, it's doing quite well. Their revenue has increased threefolds. So there's a lot of information that you can surf through, and I know it does get somewhat tiring at times, but it's what you need to do to find great companies that are that have strong balance sheets, making good money, and are undervalued. Okay, so take a look yourself. But GNK is one that I am definitely trading. I've gotten into it the last month during the sell-off, and if you sell a put option right now to December 16th, and by the way, you can simply just buy out shares, guys. You don't necessarily have to sell put options. The reason why I sell put options is because I have a lot of capital that is unused, and it's actually not really capital. It's like margin. I guess I haven't used any margin at all. I'm trying to be a little more, stay on the safe side. I know that margin is risky, and given that there is potential downside in this year, I'm not going to borrow money to buy stocks unless I get assigned, right? Because the reason why I'm willing to do that is because if I get assigned, then I get the stock at a cheap price, and I'm more than happy to let the stock ride up. Okay, so GNK, you can sell a put option out to December 16th at a strike price of $22.50. You're collecting about $500 off of a collateral of $17.50. That's great. You're essentially making 30% returns on GNK on a company that has tripled their revenue. Again, another great steal. GNK, Zim. Okay, so Zim is one of my big holdings. Zim, I like it because it pays such a fat dividend. take a look yourselves, guys. Zim stock. There was a big run up of Zim, and yes, there's always risk in any kind of company, right? If the prices of shipping does come down a little bit, there is some potential for the stock to go down, but in which it has. In the last couple of months, it has gone down quite a bit. It peaked at $88, then it went down to $57. So there's been some wild swings. But right now, the P ratio of Zim is 1.61, and they do pay a really, really nice dividend. I think this is a little, they don't pay 108%. It would be nice, but I don't know why it says that, but it doesn't pay that much. I think it pays about 20%. So that's still very, very good. It's like $20 every year on per share that you own. Okay, so that's Zim. Let's take a look at. Okay, so we're taking a look at commodities because I'm more bullish on commodities. Let's take a look at natural gas. So natural gas, the one that I really like is SWN. Okay, so Southwest Energy Company, natural gas. Guys, right now, natural gas, in my opinion, is going to be a really hot commodity because Russian exports are basically cut off from the rest of the world. I think companies that are local or domestic or just supply for other parts of the country that were cut off are going to benefit from this. And so Southwestern Energy is one company that is in the natural gas industry. As you can see, there's a big run up from $4 all the way to $7 just in April and May. So guys, right now SWN is hot. I do think SWN still does have more room to run. Taking a look at the 4 PE, forward price earnings is at 4.38. RSI is at 5 to 57, so that's not too bad. And RSI is just the relative strength index. So it's a good indicator to know, if the stock is too overbought or too oversold. And right now it's pretty modest. And so taking a look at another company in natural gas is RRC. So RRC, Range Resources. Let's take a look real quick at the option chain for SWN, which is basically what I've been doing, just selling put options. So selling put options on SWN can still give you a pretty good return. Let's do December 16th. So right now, if we sold put option out to December 16th with a strike price of $7, we can collect about $123 per contract, and so that's still a pretty good return. That's almost 20% return per contract on SWN. If the stock goes down to $5.77, that's when you would realize a loss on the trade. And so back to Range Resources, another great company. It's not as cheap as SWN, but it's a huge company. They have a market cap of $8.369 billion. So that is a huge company in the natural gas sector. And so as you can see, it has a short run up, and there's sort of a down, a little dip because the P ratio, it's not super cheap. It's trading at 19.27. So it's not a super cheap company, but it is one of the largest companies out there that works with natural gas. And so let's take a look at the option chain. I do think right now is a pretty good time to get into it still, especially with a dip in the last month or two. So if we do sell RRC, we can get in on RRC at, let's see, if we do it out to January 2023, we can sell $30 puts, and it would land us a premium of about $580. I usually like to take a look at different expirations because if you go a month earlier, sometimes it may not make a big difference. Like right now, if you do $31 expiring December 16th, you can collect $610. So that's great returns. That's over 20% returns in less than a year, a couple months. And so this is another great stock, natural gas. Okay, so let's take a look at, let's do oil. Okay, so oil, I'll always love oil. One of the new companies that I've been taking a look at that I actually have not gotten to myself is CDEV. Okay, so CDEV, it's oil and natural gas, so perhaps a good transition. I'm just kidding. Okay, so CDEV, there's a big run up again on CDEV. If we sell a put option out to October 21st, we can collect about $155 off collateral, $645. Another one I really like is I really like rig. Okay, it's oil drilling. If you have not heard of rig, let me show you what it is. So Transocean is a company, so trading at $3.99. You can simply buy out shares if you want to. Just wait for a run up. But I like to sell put options on rig. Expiring. Let's do one expiring December 16th. Okay, if we sell it at $4, we can collect about $100 off of collateral of $300. That's great, guys. You can collect that's like 30% returns in less than a year. And Transocean is a it's a fairly risky company, but I think it's still very, very solid. Take a look yourself into rig. Okay, check it out when you have some time. Another one I really like is SM. Okay, so SM Energy. Let's take a look at SM Energy. Okay, so SM Energy trading at $37.62. Has a P ratio of 16.85. That's not too bad. Let's take a look at the option chain for SM. If we do sell put options, I made an entire video about this, by the way. You can check it out in my YouTube channel. And before I begin, or before I continue, if you would, make sure you like and subscribe. If you want me to make more videos on stocks I'm trading myself, that I'm taking a look at myself, make sure you hit that like button. I would really, really appreciate it. And so, again, going back to the stocks, right now we can trade SM put options out to like November 18th. If we trade at about $35, if we do 35, we can collect about $620 off collateral of $2,880. So that is great returns. That's like 20% over the course of a couple months. Not long at all. Okay, so that's SM Energy. That's gas. Other stocks I really like is PBR. Take a look yourself. PBR is cheaper. If you take a look at PBR, Petrobras. I always like this because it's such a huge company, 45,000 employees, has a huge market cap, and it's one of the stocks that's doing quite well, selling put options because you can collect quite a bit of premium. Right now, if you sell it out to November 18th, you can collect about $275 off collateral of $1,000. So there has been sort of a little bit of a run up. If you do January 2023, you collect about $300 off a collateral of $905. So that's great for PBR. Okay, so let's talk about, so we talked about semiconductor, shipping, oil and gas, natural gas. Let's talk about crypto. Okay, so crypto, I had a friend recommend Marathon Digital, and I do think it's a great stock to consider. There's 9 employees. A lot of these are Bitcoin mining. I'll just tell you, Marathon Digital and Hut, okay, are the one that I would trade if I'm bullish on Bitcoin. If I wanted to use options, I would just sell put options again out to December 16th. And right now you can collect great premiums on this, sick premiums. You can collect about $460 off collateral of $1,000. So that's a 40% returns, over 40% returns on Bitcoin. If you're bullish on Bitcoin, I would definitely consider selling put option on this stock. Okay, take a look at Hut as well. One other industry I really like right now, and I might get some hate mail from this, but it is coal. Okay, so coal industry is going to be hot, I think, this year, just because there's so much energy supply crisis right now. Right now it's unsure that certain places in the world will have enough energy. And yes, while I don't really like coal, I know coal is not sustainable. I know coal is dirty energy, but people need it. People need it to cook their food, to survive, right? People need it to power their homes. And so that's why I have been trading Arch. Okay, so Arch Resources is one of the biggest companies in coal. It's trading at $177.80. It has 3,300 employees. So you can simply buy out shares. There was a big run up in the last year. Had made some pretty good money on coal, but you can also sell put options. Okay, so selling put options just allows you to get exposure into it with less risk because you allow yourself a potential downside. Right now, if I sold a put option at $175, I can collect almost $5,000 And yes, you would need more collateral, about $12,000. But if the contract goes up, you can simply buy back the contract. Right? I probably wouldn't sell it so close, honestly. I would go down a little further because this stock is a little more volatile. I think I sold it at the $160 mark when I did mine, possibly 160 or 165. I forget. But yeah, so you can still collect about $4,000 off collateral of $12,000. So that's still great returns in less than a year. So just that's one company. The other company that I'm trading for coal is VET. So Vermilion Energy, great company. Has a lot of potential, and it is also developed oil and gas, and so it's all over the world. Take a look at VET yourself. You can also sell put options. Again, December 16th, you can collect about $415 off collateral of 1,590. Okay, so I think I'm gonna try and wrap it up here before the video gets too long. Yeah, I think that's pretty much it, guys. I don't want to make this video too long. I would really, really appreciate a like and subscribe if you haven't already. If you want me to cover any specific stocks or companies or strategies, I'd be happy to do so. One last thing, guys, comment below with one company that you're bullish on that perhaps we can take a look at together, or perhaps we can talk about. Okay, guys, I really appreciate your time. Until next time, guys, I'll see you around in the next video.